Well, the impact from U.S. tariffs and geopolitical uncertainty could weigh on Asia's growth this year, but there are opportunities abound with the right monetary policies and reforms. So the International Monetary Fund's first Deputy Managing Director, Geeta Gopinath, spoke to CNA's Roland Lim.
So for China, yes, there are, in addition to the headwinds coming from the trade front, there are the domestic challenges that you mentioned. And we have downgraded growth for China. In April, we downgraded down to around 4% for this year, 2025. Again, looking ahead, especially into the medium term, our forecast for growth in China is about 3.5%. So we are seeing, as of now, an economy that is slowing down. Addressing the property market issues, addressing the finances of local governments, strengthening the finances of local governments, these are going to be critically important. There's a lot that can be done. The government is rolling out new programs to help stimulate domestic consumption, which I think is very critical, to build up consumer sentiment, which has been quite weak. All of that can help, and more that's done on that front in terms of providing a stronger social safety net so that you have more domestic demand-driven growth for China would be very helpful, not just for China, but for the world too.
South Korea's growth around 1%, Japan also about 1.2%. As they navigate weaker external demand, and in Japan's case also emerging sustainable inflation. What's your assessment of their monetary and fiscal policies so far?
Again, both countries have somewhat different issues to deal with. In the case of Japan, we finally see what could be a break away from incredibly low levels of inflation to returning durably back to the 2% inflation target, and the Bank of Japan has raised interest rates accordingly. Of course, it's important for them to watch the data and be prudent about responding, and we've seen that's exactly what they have been doing, because it's not just domestic developments but also international developments will matter for how inflation evolves in their country. Similarly, Korea, I think it's important to be data dependent at this point, to pay close attention to what's happening to domestic demand and the forces on inflation. But I think both central banks are very well placed in dealing with this.
India poised to be the fourth biggest economy with growth of 6.2% in 2025. It's backed by a very young labor force, yet job creation is still lagging. I mean, what would be your advice to the Modi administration in terms of policies in order to spur growth and to harness this demographic dividend?
Firstly, we have to recognize that India has done a lot in terms of reforms. Quite significant changes have happened. If I were to point out a few, what they've done in the digitalization space is really very innovative, and that is spurring a lot of innovation in India. Infrastructure has also been built up quite strongly. The banks are in a healthy place. There is a common global goods and services tax that helps unite the market in India. So a lot of positive developments. Now, continuing on that road, I think more can be done in making it easier to do business in India. There certainly are still several frictions in that space. So making ease of doing business, improving that would be critical. Keeping on the track of public infrastructure investment, that's going to be important. Reforms when it comes to land and the ability to acquire land with clean titles, going to be important. And similarly on labor market policies and reforms, and especially implementing some of the labor market laws that have been put in place. I think all of that will help India receive also even more foreign direct investment into the country at a time when everybody's looking to diversify their sources of supply.